Have you any idea how the stock market works? Or how many facts do you have of the stock market? When dealing with the stock market, there are plenty of things to learn, facts you must know, and many trends to follow when dealing with the stock market. Kindly subscribe to our channel and like this video. To succeed in the equity market, you have to be abreast with facts and information. And to help you do that, here are the top 10 weirdest facts about the stock market, those you probably didn't know. 10. The January effect. The January effect refers to the theory that, in January, stock market prices tend to rise more than in any other month. Banker Sidney B. Watchell initially discovered the January effect in the year 1942. However, this should not be contradicted to the January barometer, which foresees that stock's performance in January is a significant indicator for stock rendition throughout the entire year. Whatever the case, it's been said that tax planning is a significant driver of the January effect, and another potential driver of the January effect stock market anomalies is the year-end bonus. The January effect is investors' best phenomenon, and January is, in fact, their best month. Moving on, 9. The small firm effect. The small firm effect was brought about in the book The Cross-Section of Expected Stock Returns by Nobel E.F. laureate and Kenneth French. This is the notion that minor corporations, specifically those with the least market capitalization, tend to overpower more prominent ones when it gets to dividend payouts. These organizations with tinier market capacity usually give higher returns than large cap stocks. One reason is that smaller companies essentially have greater growth chances ahead, which steers towards an enormous consideration of their stock prices. 8. Bear and bull markets. In the world of investment and stock exchanges, bear and bull are constantly used to describe market conditions that increase or decrease in value. A bull market typically is a market with a rise in market value due to a favorable economic condition. Contrarily, in the face of an unfavorable economy, a bear market is the depreciating value in stocks. The bear and bull, on the other hand, the bear and bull tell how investors feel about the market. And as an investor, it's crucial to understand how each of these market conditions may impact your investments. 7. The United States stock market makes for 56% of the global market. The United States stock market is the biggest stock market, accounting for nearly 56% of the global stocks, and is the most expensive worldwide. The United States stock market currently holds a $34 trillion market capitalization compared to the rest of the world's $44 trillion. The United States stock market houses only 17% of the world's stocks, with over 5,000 companies. 6. Stock market correction is a 10 to 20% drop in price value. What do you know about stock market corrections? A stock market correction is a 10% to 20% decline in the price of individual stocks or the overall market from its current peak. Market corrections are a regular part of investing and spur investor panic. However, corrections are crucial for avoiding abnormal inflated stock prices. What you should know is there is nothing to worry about during market corrections, as long as you're investing long-term. Market corrections are common to see because of the many ups and downs of the market. 5. The curious case of Takashi Kotegawa. Takashi Kotegawa is one of Japan's outstanding forex day traders, who generated so much wealth trading stocks in Japan. In 8 years, Kotegawa whirled about $13,600 into over $153 million. Kotegawa merits his victory for his short-term outlook and the fact that he pays no attention to future market prospects. Anyone can become as lucky and successful as Takashi Kotegawa. It's a pure fact. Do your best. 4. Wake me up when September ends. The most famous statement of all time. You'll often hear many investors say, "Wake me up when September ends." The stock market, on average, performs not so well in September. Since 1950, the Dow has declined 1.1%, and the S&P 500 has declined 0.7% on average during September. Since the establishment of NASDAQ in 1971, its amalgamated index has fallen an average of 1% in September. There are different reasons behind this phenomenon, but one of the extensively referred is that trading volume decreases in the summer as investors take some time off and go on recesses. Once they retreat to work, they instigate a sellout as investors get rid of territories they have been hoping to sell. 3. Only 56% of Americans own stocks. I'm as shocked as you. With a population of 333.7 million people in the United States, only 144.6 million Americans, or 56% of American adults, own stock. Thus, according to Gallup, the percentage of Americans who own stocks hasn't changed much over the previous 10 years, despite significant stock improvement over the decade and the recent stock craze. The stock market is the world's most incredible wealth creation tool. To invest or join the money bags, find the best online brokerage company and set yourself to it. Investing is hard, but you can do it if you set your mind to it. Remember, anyone can become an investor. 2. The total stock market value is $95 trillion. Statistics into the stock market indicate that the cumulative value of the stock market attained a record high of $95 trillion. However, this figure is expected to grow even higher in a few years. Be a part of this lucrative venture, and I bet you'll never regret it. The United States is responsible for a large scrap of that market value. Combining the U.S. stock exchanges will likely get 56% of the entire global stock market price, or over $51 trillion in value. 1. The stock market crash in February 2020 interrupted a bull market record of 10 years. Stock market crashes are investors' worst nightmares because of the tendency to lose vast sums of money. Before 2020, the bull market had been running for nearly 11 years, which was great attainment because of history, as it that on average, bull markets last 4.5 years. On the 20th of February 2020, the global market crashed unexpectedly due to the coronavirus pandemic and the ensuing economic skepticism. The coronavirus crash caused a short-lived bear market, and on the 7th of April 2020, global stock markets re-entered a bull market, which continued through December 2020. Knowing that market crashes are typical and lead to greater yields if you're new to the game. Investors worldwide are building long-lasting wealth with the stock market. That doesn't imply that you become an investor before reaping the many benefits of stock market investments. Fact is, the stock market is particularly open to everyone. Therefore, you can become a stock investor whenever you feel ready. But first, put your money down. I hope you enjoyed today's video. Let's hear from you in the comments section below. Don't forget to subscribe to our channel, hit the notification bell for more fantastic content, and like our videos. Thank you for watching.